Bill.com reported a strong quarter. The market reaction to that report was, let's just say, enthusiastic. I mean, stock shares finished up around 30% for the day. And going through these results, I mean, there are a lot of great parts to this story, but to me, I feel like it really, to me at least, it seems like it really all boils down to the guidance. It sounds like they've got one heck of a year lined up here.
Yeah, well, it's kind of been a banner year for Bill.com shareholders. You know this better than anybody. The stock's up 180% in 1 year, including this move.
Yes.
And it's not hard to see why. I mean, their business is really catching on, and they're still in the early stages, which is kind of the key. A lot of people have said things to the effect. I've seen tweets to the effect of, why is Bill.com so highly valued? There are stocks with higher growth rates out there. And to be fair, it is. It's not a cheap stock by any means. I mean, revenue was up a little over 50% year over year in their fiscal year. This was their fourth fiscal quarter, by the way. In the fourth quarter, it was up 86%. So it's accelerating, which is nice. Customer counts up 24%. Yeah, nice, but not the stellar growth rates you see from some of these, these tech companies. The thing is that they have not really captured their addressable market opportunity. Their trailing 12-month revenue is a little under $250 million, $238 million to be exact. Their domestic market opportunity, just in the US, between the 6 million small and medium-sized businesses, is a $12 billion market. Internationally, it's a $40 billion market.
Yep.
So they're at less than 1% of that right now. And I think that's what's the most exciting thing. Not only is their growth rate accelerating, but they're accelerating into this huge market, which I guess is one of the reasons you own shares.
Well, yeah, that is one of the reasons why I own shares. So, I mean, to your point on the valuation, because I think this is something, Chris Hill and I and Emily, we were talking about this last week on Motley Fool Money. And I am not going to sit there and say, oh, wow, this just looks like an ideal entry point for this business. It's difficult to make that argument. And the reason I say that, the stock is valued at 130 times gross profit. I mean, it is still working towards that path to profitability, so to speak. So we are judging this company based on price to sales, price to gross profit, any which way you cut it. This is an expensive looking stock. Now, to be fair, when we were talking about this company, along with Lemonade, I believe it was, you and I were talking on this show several months back about the stocks that we were getting ready to buy. And you were talking about Lemonade and I was talking about Bill.com. Even at that time, I mean, you could make the argument the stock looked terribly overvalued even then. But I think, to your point, it is that market opportunity. It's a massive one. And I think that also when you look at this business, there are network effects at play here that probably some folks maybe just don't really think of. And I think that when you look at the customer base that they have, it's not just the customer base, but it's all of the other parties that are participating in that network. And so you look at the end of the quarter, and they have over 3.2 million network members. That was up 28% from a year ago. And that is resulting in those robust numbers you're talking about, growth in payment transactions, growth in total payment volume. I mean, all of those key performance indicators continue to tell a story of a business that's just capitalizing. I guess that makes me want, I mean, where do we go from here? I mean, we're seeing some acquisitions, aren't we? I mean, they're making a couple of acquisitions along the way to maybe expand that market opportunity.
Yeah, and that's a big part of this thesis. I'm really glad you brought that up. They have I saw in their quarter, they had the 124% net dollar retention rate, meaning their current customers spend more and more over time. So it's not just that 21% customer count growth. Their customers are spending more, and it's because they're finding more value in all of the services that Bill.com offers. And that's just going to grow over time too. And this is kind of where I think of Lemonade. I love that comparison. Lemonade's numbers look terrible if you just look at it on a valuation basis compared to where they are right now. Even including some of their growth, it looks very overvalued for an insurance company especially. But you look at some of the adjacent products and services they can offer and how they're going to go into auto insurance, which isn't reflected in their results at all at this point. Just kind of with Bill.com, they mentioned one statistic. You have any idea what the business to business payment volume around the world is right now?
I don't, but I have a feeling you're getting ready to tell me.
I am. Good intuition there. It's $25 trillion.
Wow.
That's
Wow.
that a lot of companies don't make anything from. And the process of getting money from a business to a business is clunky in a lot of cases.
Yeah, it
Um,
is. It is.
if you think of, if you how many invoices end up in just someone's email, then they have to wait till that person opens their email, and then they have to wait till that person's payroll department or their accounts payable department gets a check in the mail.
Yep.
It's just a clunky process and a lot of room for improvement, and that's a huge opportunity to really kind of capture some of that. And that's really where Bill.com adds value. And it's all these adjacent value adding products and services they can bring to the table.